Hello everybody, in this video we're going to be going over stacked imbalances. Thank you for WooX for sponsoring this video. If you do want a free Exocharts copy, CoinMarketMan, etc., all below, and a complete Exocharts course, check out the link below, sign up, deposit $500, and you get all of that. But nonetheless, let's get into stacked imbalances, because I see a lot of people talk about this, but there really isn't a lot of things that people cover, in my opinion, which are actually really important, especially when you're getting into trading cryptocurrency in particular, because you have different you know data available to you, and I really wanted to cover that to begin with. So first of all, in covering imbalances, first of all, because stacked imbalance is just a variation of that, is kind of like an add-on. An imbalance, I covered this in one of the previous videos, but just as a recap, an imbalance is really when you're looking at buyers, we'll change the color here, buyers and sellers overpowering one another. So okay, if we're looking here, you have sellers here and buyers here. Okay, these are all market orders, and an imbalance, if we just go over to here into Tradingview, and you can turn on this imbalance setting of highlighting them, you can see this here, and the way this is calculated is, so you can see here it's highlighted on the right hand side the buyers, and on the left we have highlighting of the sells. Okay, and an imbalance is where it's comparing. For the right, you're going to be comparing diagonally to the downside left, and for the sells, you're going to be comparing diagonally to the upside right. So what do I mean by that? So you have here 14 Bitcoin worth of buy volume that is overpowering this zero value, okay, by a certain percentage that I'll get into in a minute. Again, this 12 value here is overpowering this one value here, again by a certain value that you can set within the settings. Again, here you can see 30 to the 6, that is much more. That is kind of smashed through the orders, and that's more power towards the buyers. In this case here, they have a lot of control and are moving the market fairly quickly with their market orders. Alternatively, again, with the sells, let's just pick an option here. Okay, even here, so you've got 59. Okay, and that is overpowering the 10 market buys to that just came just before that. Okay, so hopefully this makes sense on how it's calculated. Now, if you go into the settings of this, you obviously got the imbalance setting of 400%. So what that means is that for it to be an imbalance, this value here, so 14, has to be 4x the imbalance on the sell side, which in this case could have been 2, 3. I believe 3 is around 3. Correct my maths, 3 or something there, for it to actually be and enable it as an imbalance. Okay, again here 57 is 4 times larger than this 5 here. Okay, and if you see if we decrease to like 100, you'll see we get like it should really flash up a lot more. Yeah, everywhere is based on the imbalance. So it's about configuring this setting to as you like. Again, on Bitcoin and Ethereum, it's also dependent on tick sizes. 350, 400, 450, in my opinion, is really good. You don't want it to be highlighted everywhere. Okay, that is really important to understand. You can see at the top here even, right, 34 over 4. Now, a lot of people's conception of this is just, okay, when they see a stacked imbalance, that must show people buying. No, I think this is really important to understand, which I'm going to get into within the stacked imbalances now. So if we just highlight stacked levels 3, okay. So where you have 3 or more, right, it will highlight it for you and extend it out. It should do, at least. Yeah. So you can see there's 3 here. Obviously, those 2 have been hit already, but it's got 1 and it's extending them out. Now, the power of these levels is it's obviously highlighting where previous large participants have been involved in the market. Now, why is that important? Well, most people will be like, well, someone's bought here. Well, not necessarily. This is really important to understand, is that, and this is like just a common misconception with delta and market buys and market sells in general, I see throughout the industry, is that when someone sees market buys and market sells, that they just generally connotate that towards new people entering the market, which is not the case. Now, obviously, you can't check this through Tradingview, but what I mean by that is, right, if we have 63, we've got 63 Bitcoin being bought here, market buys, that doesn't mean that someone's or multiple people have actually entered 63 worth of new Bitcoin positions here. They haven't necessarily newly longed here, which is really important to understand, because when you're looking at stacked imbalances, you're trying to kind of envision where people have, who are already positioned could be getting out of the market or defending their levels, right? Because a market buy order here, 63, and I'm not, it could be new positions, and I'll get you through how you can do that in a second. this could be new positions, but let's just make the assumption it's not, and that would be shorts closing, right? So this could be shorts closing that have also caused this value to be market buys, right? Because if you close a short, you're actually market buying, right? Why is that important? Well, if price revisits this region, those, obviously in this case it rejected, and I'll go through again, this is just an example case. These 63 buy or market buys are people who are actually already out of the market. Therefore, price revisiting this zone actually isn't as influential as you may believe it to be. That's why it's important, in my opinion, to actually understand, at least with crypto and the data that we're given, are people actually already in the market? Is this their positioning actually relevant to price testing these levels, right? Because if someone's you got to think from my perspective, right? Let's say you've entered a position already, you've exited, you've caused this imbalance. Price revisiting it sometimes isn't going to be as influential as it may seem. Okay, so hopefully that makes sense on that front, because it makes sense to look at that open interest. Okay, on the other side, let's say for example this is new longs opening, right? New longs, someone's entered new longs here. Price has caught them offside, right? And then price has revisited the level where they're potentially still holding this long. Again, you're making assumptions in this case. Nothing is ever categoric. I see a lot of people talking, and they always talk in absolutes when talking about this. You're really making an educated estimate, and nothing is ever absolute. So again, I'm making the assumption that they've opened a new long, they've held it, so that when price revisits this region, they could close their position for break even. Again, that could be defending this level, thus helping cause a further reaction to the downside at these levels. Therefore, okay, I've been ranting a bit there, but hopefully it's making sense just to understand that just because someone's more, there's been a string of market buys that have caused an imbalance doesn't mean that level in the future is going to be influential, okay? So that's really, really important to understand. I'm sorry for kind of rambling on there, but hopefully it makes sense. But nonetheless, these levels can be useful, of course. Obviously, where you have these before massive gaps in them, like here, there are really no imbalances here. You've got this one before a massive gap, so if price reclaims this, there really is no strong sign of buyers or sellers it can really run into before running up to $71,000, in my opinion. So yeah, it's about looking and comparing that. Now, Tradingviews, obviously there are a few things, and I want to talk you through this because obviously I'm looking at Tradingview here. There's a few things they don't have that I'm going to mention now, and preparing you for maybe they'll add it, and I'm going to show you how you can use it with Exo as well. So right now, you only have these options of, let's click here. You have the option to highlight stacked levels, 3. That doesn't include, you don't have really control over the fact of what if those 3 stacked imbalances are really weak imbalances. And what I mean by that is, remember what I said about that percentage where it has to be 300-400%, again, depending on your setting. Well, let's say, for example, you have here, this is 0, and this value could have been 5, and it would have formed an imbalance. So what's really important here is that this, Tradingview doesn't really allow you to kind of specify for really stronger imbalances. You will get all of the imbalances rather than being able to actually kind of narrow it down to a window of really better imbalances which occur with higher volume. Okay, so what we've done in Exo, we'll just go over to here again. This is a new template I've done, so I'm actually using this now all the time. But what you can do here, right, is if I'll head over to this really quickly. Right, is in Exocharts, we'll move this up. You've got this imbalance option, right, where you can see the imbalance comes out and extends. But if you go to settings, you've got this minimum imbalance volume. Now, what that means is I can if I want to see imbalances that are only worth 300,000 or more, right, in dollars wise. Again, you can convert that into Bitcoin. That's something else they haven't done. Then you can highlight that. But you can see here the power of these imbalances. Could be, they're not compared against zeros. That's another thing you can actually have within Exo, is ignore zeros for the imbalances, because if anything is almost an imbalance against 0. Okay, so that is really important to understand as to where these imbalances kind of are coming from. Not every imbalance is important. You can filter for the stronger ones, which again, stronger volume, increases in open interest. So that brings us back to what I was saying before about the imbalances and talking about which ones are stronger and position wise. What I'll do is I'll clone this tab to show you this. Right, because like I said, with crypto, obviously we have the option to have open interest. We're lucky enough to get that data. Okay, so if we just head over to this here, and then we can click on open interest removed versus created, for example. Okay, So what that allows us to do is see and make a further educated estimate as to whether these imbalances are formed of people actually newly entering longs, right, or have exited positions. So right now you can see that this green bar, these green bars that I've changed it to, are actually people increasing their open interest. So open interest increases versus remove. What we can actually do here as well, I believe, is we'll change it to net profile. So you can see here, it's fairly neutral. This could be, I mean, it's just about ticking on the positive side. So you could say that there are still potential, there's a decent amount of new longs actually opening here that could be defending this level if revisited, right? So what I'm saying, and to really shorten this out for you, is just be aware that, again, with this, sorry for blinding you, that was kind of like a flashbang scenario. What I'm saying is that don't take every imbalance as kind of face value. They're not all the same. Some are more important than others. Like here, look at this. Okay, I just spotted this, right? This is classified, these are classified as imbalances, right? Buying imbalances, 7, 7, 7, 7. I mean, that is considerably weaker than other ones, such as, 71, 46, that are also, again, spread across a bunch of zeros, but nonetheless, they are still imbalances because they're going back against zeros. So it is about looking at, the volume of the imbalance, the open interest given from the imbalance, and then hopefully you can understand as to why you potentially get or see rejections, etc., from these levels. Now, these are just curated levels of interest. It's really important to understand this. I don't just go, oh, there's an imbalance here, I'm going to start selling or buying, right? What I do is these can potentially form levels of interest. So, for example, in the morning, you would go, okay, look, there's these buying imbalances coming in here. This is now a potential level of interest for me. Right, let's see what happens when we get there, and now let's check our execution entry system to see if there's any kind of worthy reaction there to potentially take a short trade, right? So these are just curating levels of interest and not just blindly setting limits there, although people do. I kind of take a bit more of a systematic mathematical approach to things. So yeah, I really, there's not much else to say on this topic. I'm assuming TradingView are going to add, the option for minimum volume settings. Maybe they'll add open interest to this. I mean, these aren't, I would go with Exo, but again, if you're looking to get into TradingView imbalances, then obviously these are the basics they've got here, and they're quite good to look at if you want as like a starter. But again, like I showed previously, Exo's got a lot of different options here to run through if you want that. And again, thank you for sponsoring this video, and I'll catch you all later. Hopefully you learned something with this one.